Hello, sector watchers. Welcome to this fourth episode of Sector Spotlight on Tuesday, the 22nd of October. This is your weekly update on sector rotation and anything remotely connected to sectors' relative strength and/or rotational analysis. My name is Julius de Kempenaer, and I'm your host for today's show. With me are Zach Dillon, who's handling the technology, and my producer Rachel, who will help me with questions from the audience and make sure that I stay on schedule. We're trying to make this an interactive show, and we encourage everybody to participate in discussions or ask questions. Email and social media channels are open 24/7. The live chat is open during the show, and we will keep an eye on what's coming in and possibly answer as much as possible while we are on air. So here is what we're going to be looking at today. We start off with an overview of asset classes and sector performance and a little bit of an outlook for the days and week ahead. Then I will try to explain, or not try, I will explain the difference between daily and weekly RRGs, because that's a subject that keeps popping up and raises questions with users. We'll have a short break, then we'll answer a couple of questions, and there is at least one that came in via the mail, and we'll deal with that then and there. And then at the end of the show, we're going into a little bit more in-depth view on the consumer discretionary sector, the XLY sector. So for today, the asset class RRG on a daily basis shows an improvement actually for the more risk-on assets like SPY and commodities. Especially SPY had a very nice rotation over the last 5 days, started in lagging and is now almost into leading and having another good day. The real estate asset class, VNQ I use on the asset classes, made a very sharp hook back up. If we browse back here, we see, and watch VNQ here, it hooked back up, which is actually a very strong sign, and it's a very strong hook. So real estate seems to be back on track, which is a good sign. And then on the weaker side of things, we have the fixed income related asset classes, and also the US dollar lost about 1.1% over the last 5 days. If we bring this to a little bit bigger picture and set it on a weekly RRG, then things have not changed that dramatically, but I have to say that equities, SPY are doing really well. They entered into the lagging quadrant a couple of weeks ago, but almost immediately started to turn higher and gain level on the JDK RS momentum axis, and we're now almost at the center of the chart, but heading in the right direction. So we're going to keep an eye on that. For the time being, in the short term, I think that the risk assets like SPY and commodities are the ones to watch because they are heading in the right direction and almost inside the leading quadrant. Now, one of the things that I always like to do, because this is pretty good for US equities, right? So this is all US related asset classes, and equities are looking good. Now, to put things into perspective, I like to give it a try and look into US equities in an international perspective. And for that, I use the RRG with international stock market indexes. And if we put that, and let's start with the weekly here, I will have to find the S&P. It's right here. And if I highlight it, I can do that by clicking that line in the table below. And we'll see that US equities are actually inside the weakening quadrant. It's a relatively short tail, but they are heading towards lagging. So the heading of US equities within the international arena is not all that good. And if you look at the tails of the whole bunch of markets that we see here, there are a few that are probably worth keeping an eye on. At least just be aware of the fact that the US at the moment is not the strongest market in the world. It's a strong market, but it's not the strongest market in the world. One that I particularly like here is the Nikkei index. If we bring that one up, we can, and that's the good thing, if you put them side by side, you can actually look at things in various time frames and together with the RRG. I already had the SPY chart up here. For me, this overhead resistance level right here, that's the line in the sand that I'm looking at. It looks bullish, but we haven't broken that area yet. And so the high here is 300.84, and then we had a week with a high of 301.07, and we had a high of 301.24. So that 300 mark, 301 mark, that's definitely a level to watch. And we are at that level right now, 300.48. So it's very exciting. It's very good to see what's going on. But we do have to break that barrier before that elevator can really start to accelerate and move higher. When it happens, we probably have a very serious break. Now, let's have a look at what the Nikkei is doing there. So if we put $NYKK there, so why is that over there? And then you can see the relationship here. And I have to change this into $DGW. That's the Dow Jones Global Index. And please be aware of the fact that for these international markets, I always use the underlying indexes. I've explained before why I do that and why I shift to indexes rather than ETFs. And that's because of the currency risk, because the ETFs that are quoted on US exchanges, they are all quoted in US dollars, and that will distort the picture in terms of underlying strength for those markets. Now, if you look at the Nikkei index, that's actually a very nice image. You see that it is breaking out of this consolidation pattern here. Unlike the S&P 500, it's not nearly near its all-time highs, but it's got quite a bit of potential all the way up to that 24,500 level. And what's especially interesting, because it's all relative that we're doing, is the turnaround that seems to be taking place in this raw relative strength line of the Nikkei versus the Dow Jones Global Index. And that's being picked up by the RRG lines, where the RRG momentum line was already above 100 for a couple of months and has now joined by the RS ratio line that's just crossed over, pushing the Nikkei into the leading quadrant. So the Nikkei really worth looking at. And another market that might be of interest, and I know that India is a market that a lot of people look at. It's an upcoming market. I'm not sure if that still counts as an emerging market, but I keep an eye on it for sure, because next month I'm actually invited to speak at the CMT Association's India Summit 2019. So I'm very honored to be able to go there. I'll be speaking there together with Ralph Acampora, who you all know. And if you don't, then please look back the show that Dave Keller did with Ralph Acampora in the interview. Ralph is a great guy. He's a walking historian of stock market knowledge. And also Martin Pring will be there. And of course, we all know Martin Pring he's one of the commentators here on the site. So India, interesting, looks to be bottoming out. It's much more of a range rather than the Nikkei, but it is heading in the right direction. And from a relative perspective, it could outperform for a couple of weeks. In order for a real improvement, we need to break out of this big consolidation pattern. Okay, that's for the international perspective. Now let's shift to the sectors, because that's what we really like to look at. And this is the weekly image, where you see that the utilities and real estate are defensive sectors. By the way, I got a ton of replies on the offer of my spreadsheet last week. I think this morning I sent out the last batch of people who wanted that spreadsheet. If you asked me and you haven't received it yet, please ping me, because my inbox is now empty, at least empty with requests for that spreadsheet. If you want it, I'll be happy to send it again. Utilities, real estate, rolling over. That's really the defensives rolling over and losing strength. And we see some other stuff moving higher. Technology popping back up. But the one that I really wanted to focus on today is consumer discretionary. And I would say it's an uncommon rotation, because we moved into weakening, we moved over into lagging, and then we started to move up, and now we just moved from lagging to weakening. And that doesn't happen very often, that it usually crosses the 100 line on the momentum scale, so it usually moves into improving. We have seen situations where a sector crosses into lagging and then starts to improve, then goes into improving and crosses over. But this, and I haven't tested it. I think I should do some work on what this means when that happens, because it's a very rapid rotation. And these rapid rotations, especially on the right-hand side, they're usually very strong. So that's one of the reasons I wanted to take an extra good look at the consumer discretionary sector later on. If we do that on the daily RRG, you will see exactly why I think that is interesting, because if we now browse over the various sectors and we look at the last 5 trading days, let's do that by sorting them on percentage change. So we're going to go all the way down now in the list, starting with the strongest sector over the last 5 days, the last week, and that was actually real estate. And you can see here a very good example that the performance doesn't necessarily have to match the trend, because this trend seemed to be weakening, but the performance was very, very strong. So there is a very good chance that this is starting to curl up. So real estate, very strong last week. Utilities, still very strong, but moved into the lagging quadrant, so it's losing its strength there. Financials improving, almost inside leading. Staples losing it, and here we have another defensive, so utilities, real estate, staples all losing strength. Healthcare improving, is in leading, but it lost a little bit of momentum, so not all that good over there. Then the S&P 500, and then these sectors have been underperforming the S&P 500. So this is the energy, industrials, although it looks good, it's improving inside the improving quadrant, and it has a strong heading. And then discretionary, which at yesterday's close here, this is real time, so this is a fluid observation. This is at yesterday's close. That looks really strong because it moved into the leading quadrant, and then there you go. And then we'll have communication services, technology, and materials. And as I said, the consumer discretionary sector is the one that I want to go and focus on a little bit later. Now, very briefly, I want to explain a little bit about the difference between daily and weekly RRGs, because you've already seen me switch back and forth between dailies and weeklies. And if we stick with this example here, where we have the consumer discretionary sector inside the leading quadrant, basically just crossing over from improving into the leading quadrant. If we switch to the weekly RRG and update it, and now I have to find, where were you? Here you are. So you see that it is at a completely different position. Let me actually bring that RRG back up here so we have them side by side. Sectors. So we have the weekly there, and I have the daily here. And I'm going to highlight XLY. Where are you? Here. So this is the daily, this is the weekly, and you see the difference. So on the daily, we're all the way there, and on the weekly, we are here. The weekly is 5 weeks of 5 days. So if I move this slider here to 25 days, come on, yeah, there you go. Now, this image, so this rotation here for XLY covers the same period in time as the one that we see here on the weekly. So this small rotation on the weekly is actually this big rotation on the daily. And the best way to explain it is that it's sort of the same difference as we see between a weekly and a daily bar chart. And there's actually a Chart School article. If you go to Chart School and you search for RRG, you will run into this article here, and a section of that article, of that explanatory article, is about the difference between weekly versus daily. And there is actually an example here, and the best way I can explain it is by comparing 2 charts of the S&P 500. The left chart is a daily bar chart. And as you can see, you have lower highs and lower lows over a period of, that's about 6-7 weeks. If we project this period of 6-7 weeks onto the weekly chart of that S&P 500, it's part of a bigger uptrend. It's a series of higher highs and higher lows. And this little blip from high to low, which is just like 1, 2, 3, 4, 5, 6, 7 bars, is just a high-low rotation on the weekly. No problem at all, just continuing its uptrend. If we zoom in on the daily, we see that this one move down is actually broken down in 1, 2, 3, just a zigzag move of lower highs and lower lows. And that is exactly what you will also see on an RRG, where the daily RRG shows you a lot more granularity, a lot more detail than on the weekly. So this 25-day trail covers this 5-week trail. And you see that they're moving in this largely in the same direction, but this is much wider and much more detailed than it is here. And you will see that over and over again. And I like to put these side by side so I can see those two different time frames to do my analysis. But please be aware that a weekly RRG can differ greatly from a daily RRG, and they both have value. And the extra added value is when you can start combining the two. And I really think that 1 and 1 equals something that is more than 2 here, because you can get the big picture together. Anyway, so far the difference between daily and weekly RRGs, if it's not clear, all the channels are open. Please ping us messages and questions. We're happy to answer them, because it gives us content to talk about and stuff that you really like to hear. We're going to a little break right now, and right after we'll be back with some more questions and an in-depth view on the discretionary sector.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
And we're back. And I just saw the chat box. That's very, very empty for a lot of people. So don't be shy. If you have anything to ask or even suggestions, I'm happy to talk about it. Rachel, I think we got one question over the email this week, or we actually did get quite a bit, but there's one question that we may want to talk about in the show, right?
Yes, it's from Rick, and he asks, thinking of your Dow 30 experiment, how do you actually determine what you would classify as stocks in the top quintile at any given moment? And exactly what constitutes rebalancing of the top quintile monthly?
Yeah, that refers to an article that I wrote in the ChartWatchers newsletter a couple of weeks ago, it is right now. And we talked about it in the Sector Spotlight show following a presentation that I did at the IFTA conference in Cairo. And it has to do with a very basic, simple strategy where I am creating a portfolio of the top quintile stocks in the Dow Jones Index and holding them for a month and then rebalancing. And what Rick is actually asking is how that is done, how that quintile is determined. And this is here. I'll go back about that. Let's first bring up that Dow Industrials. Just put it here. What I do at the end of the month, and this is a weekly RRG, so we're not there yet, so we can't do it for October. But let's suppose that we are now at the end of October. We just start counting from the right until we reach 6 names. So right now it's Home Depot, Apple, Procter & Gamble, Walmart, Coca-Cola, and Nike. that would be the portfolio. At the start of the month, you buy equal weight, 6 positions. That's 16.6666 until the end, 7% of your portfolio in these 6 names, and you keep that until the end of next month, until the end of the month. So maybe the confusion was because there is no monthly RRG. How can I rebalance? You just, at the end of the month, you look at the weekly RRG, you take the top 6 based on the RS ratio axis, and then you're going to hold those stocks until the end of the month. And then you're going to do that same exercise again. So if we browse back on this RRG here, and that started on 27th. So here, this is what the situation that we had at that time. So it's PG, HD, KO, Walmart, and McDonald's, I think it was, maybe Microsoft, one of the two. I don't know. We'll look at that later on. And then we just, this week, even though like Apple came in there and Coca-Cola came in there, we didn't do anything. We're just going to act at the end of the month. Then we're going to rebalance. So that is how you do that. And I have very quickly put together a quick spreadsheet on where we are right now. It's very, very early, and this should be, this is a little bit longer term strategy. But at the time, this were the prices on the 27th of September. This is actual. The portfolio is now down 0.26%, while the index is almost unchanged. So we're like down 0.3%. But I'm not too worried about this. This is just in line. I mean, it could be different at the end of today or at the end of the week. But this is how we're going to monitor those 6 stocks. And that's how you reach that quintile of stocks. Anyway, the consumer discretionary sector. How are we looking at that? Did we get anything else?
Yeah, we do. We had a question just come in from Murphy, and they asked, can you talk about Beyond Meat and the long-term outlook? And that symbol is BYND.
Ooh. Is that a discretionary stock? I actually have no idea.
Let me check.
Because I wanted to talk the... Woo! Oh! Murphy. My God. Where is that stock? It's now completely gone. Is that a new one?
Yeah, it is. It's a fairly new stock.
Well, long term, sorry, not a clue. This stock is around and we have no history, so you can't do any analysis on history. But from the RRG and on this chart, I wouldn't touch it right now. Wow, that was a scary chart at RRG. Let's quickly move over to the consumer discretionary sector, because we're running out of time already. And what I wanted to show you is how I deal when I approach a sector. We've seen that the consumer discretionary sector seems to be interesting on the RRG for sectors. What I then do is I actually open up the predefined group of consumer discretionary stocks here, and I will open up an RRG, and I have my chart style set up where I have a lot of templates, and I take the one that uses XLY as the benchmark. Now this doesn't make any sense for BYND, but it does, for example, for TGT, for Target. That's an interesting stock, and you see why it is deep inside the leading quadrant. Do we want to chase this? I don't know. It's late. Do we want to hold it? Most definitely. But one of the things that I want to show you is one of the things that I almost try to do always is when you go to analyze a sector more in depth, especially the high-level sectors. I go to the S&P, to the State Street SPDR website, and I look for the composition of the sector that I'm looking at. And here we have the XLY, and this website is chock full of super interesting information. You get all the information, all the descriptions, the features, the performance, etc., of that particular ticker symbol. Right now we're looking at XLY. But what's super interesting is the holdings. And here you got a ton of information about that sector. And especially this list here, these are the fund top holdings. You can actually download a spreadsheet with all holdings. But if you look here, then you see Amazon, Home Depot, McDonald's, Nike, and Starbucks. And I've done the work. These 6 names, that's about 50% of that index. So when you go on an RRG for that sector, you definitely want to keep an eye on those big names because they are driving that sector. And what I'll do here is I would go symbol, look at Amazon. Not very happy with Amazon at the moment. Home Depot. Where is Home Depot? Much better, very stable, short tail on the right-hand side, looking very good. McDonald's. Inside weakening, heading for lagging, not too good. And then we have Nike. Nike, inside leading, very strong heading, very good. And then let's stop at Starbucks. And I know Tom Bowley won't like it. I mean, I'm always joking with Tom Bowley about Starbucks. That's a stock that you would never sell. But right now, it's inside the weakening quadrant, and it's heading towards lagging. So I think Tom actually needs to drink more Starbucks to bring the stock price back up. But this gives you a very good idea about what's going on there. And if I look at, with what we've just seen, we haven't looked at a single chart yet, but the information from the weights in the sector and the positions on the RRG, we have Amazon and McDonald's, 2 of the big ones that are actually not looking too good. And we've got Home Depot and Nike that are actually looking good. The sector itself is looking good. So I think here the key to outperform the consumer discretionary sector is actually to be in the right stocks, in the right big names. You can make a lot of money in the smaller weights, but if you want to keep up, you need to be positioned at least in a few of the big names correctly, because they are driving that sector. If you're wrong about your bet, let's say in Amazon or Home Depot, that can hurt your portfolio very much. If you're wrong in one of these smaller things, that's not going to hurt the performance of that sector too much. Now, let's go quickly over a few that I think are really, really worthwhile looking at. That's WHR. That's the one that popped up right here, Whirlpool. This is the stuff I like. Inside leading, strong RRG heading. And if you then look at the chart, we've been breaking resistance levels. There is still quite some room to the upside before we hit the massive upside resistance levels. And it's bottoming out on the relative strength line, and the RRG lines are starting to pick up. Another one is DLTR. And this one is actually breaking out to new highs. So here we have the best of both worlds. We have RRG lines picking up. Let me go to DLTR here. This is another one. Inside leading, very strong RRG heading, breaking out to new all-time highs, breaking out, about to break out on relative strength, and improving RRG lines. That's the stuff that you want to look at for this sector. I'll write this up a little bit more in an upcoming blog because we're running out of time. So this was the 4th episode of Sector Spotlight. Thank you for watching. Please keep those questions and suggestions coming so we can make sure you and I are on the same page. And I hope to see you back next week, same day, same time, every Tuesday, 10:30 to 11 a.m. Eastern. Meanwhile, if you want to read more about sectors and RRGs, please check out the RRG blog on StockCharts.com. And even better, subscribe using the link below each article to make sure you will receive a nudge every time that a new article is posted.